How's it going, fellow traders? It's Magic Trader here. This is the CFTC report for May 29, 2018. And this is a snapshot here of the latest positions held by the banks. And so let's get right into it by taking a look at gold. Alright, so what do we see with the institutions? So, last week we had a drop from 201,000 to 189,000 positions, and so as we are getting this consolidation, the institutions increased their longs once again from 189 to 193. In the meantime, and more importantly, take a look at what they're doing with their shorts. Okay, so 3 weeks ago their short positions were 109,000 and then dropped down to 98,000. And now, during this candle of consolidation, we see a drop from 98,000 to 78,000. So, what does this mean? Well, short exposure dropped from 35% down to 29%. Would have been more if we didn't get the increase in longs. So this could be the first sign that a move to the upside is to be expected. Okay? We can't base a move to the upside just solely on this, but this is going to be an indication, or let's say a piece of the puzzle for a much larger picture. Okay, so keep this in mind. Shorts being closed off, potential move to the upside on gold is what I want you to remember. Okay, so now let's take a look at oil. What do we see here with oil? So over the last few weeks, we see that institutions have been taking profits on their longs. Okay, we had 850,000 positions here, down to 729, and that comes as price reacts from this weekly supply imbalance right here. Now, I have been mentioning that this could very much likely be the zone that the institutions take profits on their longs, and the beginning of a larger move to the downside. Okay, so far we're seeing very good signs of the institutions taking profits on long positions, while at the same time, take a look, shorts remain roughly the same, right? From April 17th, the highs 850 down to 729, shorts 121,000 to 121,000, the same. The only difference is over here we had 87% overall exposure geared to the long side, and now we have 86%. So what does that tell me? That tells me when I see these numbers staying like this is that they do not want to start piling in short positions, because the very fact that they're selling long positions causes a move to the downside. So if they both sell long positions and close off, or sell off long positions and add short positions at the same time, there'd be too much of a move to the downside. So they don't want to do that. They want to keep prices as high as possible as they take profits on those long positions. Once they're done taking profits on those long positions, then they'll be more inclined to add shorts to cause a bigger move to the downside. So I think this is just the beginning of us seeing a potential bigger move to the downside. Okay, all the signs are looking good so far. Still waiting to see a couple things happen in this coming week to be assured that this larger move to the downside is going to take place. But the members of the community already took profits on long positions that were opened, and now we're even short oil. Some of us are short oil. So those positions have been doing very well. Let's go on to the US dollar. So US dollar increases longs by about 4K, but they also increase shorts. Bottom line is shorts are still aggressive and longs are cooled off. So with shorts being aggressive, as I've been saying, I'm expecting a move to the downside. Simply because they have so much of a short exposure that they wouldn't want to just push price up like this. It just wouldn't make sense wouldn't make sense for them, because they have so many short positions. Yes, they have more longs than shorts, but based on the coloration of the cells, we know that short positions are still very aggressive based on their previous size, and so they want to take some of those off. I mean, that would be the most likely scenario, and it's the scenario that I've seen happen more often than not with the banks when they're positioned like this in scenarios similar to this. So I'm expecting a move to the downside. You can see that there's a clear path all the way down to here. So I'm expecting that move to the downside. Now, you remember when we were looking at gold, I was telling you that they're displaying some signs of a move to the upside, right? So that supports this move to the downside. Piling in shorts supports a move to the downside. Okay? So we still need more pieces of the puzzle to get a better picture, so let's continue on the journey. Aussie US dollar. What do we see? So as price was consolidating here right at the weekly area of demand, the institutions added a little bit of their longs, but they also added shorts. So they were aggressive short here a couple weeks back when they first hit the area of demand. Then they closed off those shorts. Now they're adding back some of those shorts. So what's going on here? Like I've mentioned before, I believe what's going to happen is a push to the upside, hit this area of supply, and then a deeper penetration of that weekly area of demand here. So if they are going to expect a move to the downside and the supply is very close to being hit, I mean there's just a little bit of a move to the upside, we got that underside of the weekly trend line also keeping prices low. So quick move up and then a down. Wouldn't you want to start adding in shorts? You would, wouldn't you? So shorts are aggressive, longs are not. That just, to me, tells me they're preparing for that type of a move. Okay? So let's take a look at the US CAD. What do we see? Price ended up moving up to that test of that trend line, and longs are cooled off. Not much happening in terms of that, but take a look. Shorts are cooled off, but a big increase from 23,000 to 32,000 as price was moving up. So why are they adding shorts? Well, again, if we're expecting a decline in price in the US dollar, wouldn't that force and put pressure on the US CAD to drop? So if that was going to put pressure on the US CAD to drop, wouldn't you want to start adding in shorts? So another piece of the puzzle here, displaying a picture like this. A little bit early to tell, but that's what I'm seeing. A decline in net positions also supports a move to the downside. So we'll see how that plays out. US Swiss franc hitting the tested weekly area of supply. We got that drop that I was expecting. And now stalling. So as the drop happened, longs increased by about 1K, not too much. But here's something tricky. We were starting to become aggressive and then less aggressive, and then all of a sudden a big drop in short positions. Why would they close off short positions from 25,000 to 19,000 as price was dropping here? Questionable. This number just seems very out of the ordinary here. So big increase in long exposure from 71 to 76%. So this one does not fit the piece of the puzzle. So far we've seen with gold, oil, the US dollar, the CAD, we see those pieces of the puzzle fit perfectly, okay? But this one doesn't. So this one I put on the side burner because I just want to learn from it. I want to see next week's data and see why this number dropped down. Is next week's data going to jump back up to 25s? Possibly, but we'll wait and see. So we move on to the euro. What do we see with the euro? So we see that the institutions added 5,000 to their longs, but they also added quite a significant amount to their shorts as price was dropping. So that makes sense. Price drops when you add short positions, okay? And they needed to add so many short positions that they were able to take out this area of demand. So they took out that area of demand, okay, causing a weekly area of supply here, and price dropped lower. But as price was dropping, they're starting to add to their longs. Is it because they're in preparation for a move to the upside? Possibly. Good indication of that, right? So Bottom line is shorts are cooled off, longs are still aggressive. Do they want to drop price like this when longs are aggressive? Most likely not, at least according to what I've witnessed with the markets and following the banks for many years. They typically don't want to. So expecting a move to the upside, and as with gold, we saw early indications that that could possibly happen with gold. I think this one will follow along. The only thing is that we got this area of weekly supply, which could cause a speed bump or even a drop from that area. So watching this scenario very closely and waiting to open up a short position myself to ride this one further down. Pound US dollar, we see an increase, a big one. This is one of the more telling of the charts, because if you take a look here, this drop here is this data here. As price dropped, they increased shorts, causing the drop, but at the same time they added a massive amount of longs from 56,000 to 71,000. Right down here. Are they preparing for a move up? Well, I'll tell you one thing, this chart is the cleanest one for a move up. Nothing blocking price. I mean, it's very similar to the US CAD, or sorry, the US dollar. So very easy for a move like this. Momentum just has to shift to the upside, and it's in the process of doing that right now. It just needs to break through some barriers, but once that happens, we'll have an easy trip to the upside like this. So early indication, this piece of the puzzle fits perfectly with the larger picture. US dollar, Japanese yen. So we see a decline in long positions from 76 to 71,000 as price drops. So taking profits on longs, not a bad idea. And also taking profits on shorts. Well, shorts were at 64. We're at 64. They added to 73. And then close from 73 to 63. And then the drop. Testing that trend line. Very similar to, what's the other pair that was doing something very similar? Yeah, the US CAD. So that's pretty similar, isn't it? US CAD and this one, both hitting trend lines. So we got that pressure to the downside, then it stalled and we got the pressure back up. But I believe if the US dollar continues to get weaker, there's a good chance that this can drop even further. Okay, but I'm looking and waiting for a foundation to be built so I can open up a position eventually to the long side like this. So let's get on to the last one, Kiwi Dollar. And so price was consolidating here at this weekly area of demand, and as that was happening, the institutions added to their longs from 27,000 to 30,000, and they added about 1K to their shorts. Not a big deal, causing long exposure to rally up from 49% to 51%, becoming just a little bit more neutral now. So clear road to the upside. There's some obstacles that have to be taken out in order to get there, but I think this is also one of the clearer charts. So another one that fits the piece of the puzzle, longs being increased. I mean, although it's just 1 week of longs being increased, I'd like to see at least 2 or 3. This could be an early indication of that bigger move to the upside like that. Alright, so that's all the major currency pairs and gold and oil. So this coming week on Tuesday we have the Aussie rate statement coming out, so that'll be interesting. So with the Aussie rate statement, let's take a look at the Aussie charts. What could we expect? Oh, interesting. So we're at demand. So regardless of the rate statement, a couple things can happen. I think the likelihood of a move to the upside happening is greater than a move to the downside. Okay? That's what I see. But we'll wait and see. Not opening up any positions on that one just yet. Alright guys, enjoy the rest of your weekend, and we'll see you next time. Take care.